Yo guys, welcome back to my YouTube channel. So I just wanted to jump on today and make a quick trade breakdown for this trade that I did. In the end, it went just under 19 to 1. I got 85 pips out of a 4.5 pip stop loss. So I just wanted to come on and break it down for you guys and show you the logic behind my trading. So the trade overall started just mainly based on the 4-hour time frame. So going into the week, as I mentioned in my forecast, what I was expecting was a sell out of this area here, so basically this. But what actually happened is, as we approached that area, there was small reaction before it broke the structure. So the whole sell thesis based on that was invalidated at that point. So we had a break structure to the high. Now at this point, I was looking to potentially buy from down here, but that didn't happen. The price never got back there, and what we actually had was another break of structure on the high. So at that point, we basically had our changing trend on the 4-hour. So we don't know how high it could go now. It could just keep going to break the daily structure, to be fair. But what I was seeing is that we were definitely looking at buying opportunities in the market at this point. Now, what I identified was this order block down here. This area of selling here caused that overall impulsive move to the high there. So for me, the institutions were active from this level, and that's why for me the point of interest is here, because that's the area where I think the institutions would have to bring the price back down to, so that they can mitigate the positions that they took in here before moving price higher to profit from the positions that they'd accumulated for buys. So I was essentially just looking at price action and waiting for this opportunity to play out. And as we can see, that is what's happened. But I'll explain now how I actually got the entry. So after I'd seen, so I came to the chart on the early afternoon in October the 7th, which is yesterday as of recording this. And what I'd seen is that after tapping into that area that I identified on the 4-hour chart as an area for the market to travel upwards from, we had one 15-minute break of structure, and then here a second 15-minute break of structure, which for me confirmed a changing trend on the 15-minute to buys. So at this point, it's looking pretty likely that the market will follow through with buys, because we've reacted from the area which I predicted a reaction from on the 4-hour, and also we've got two break structure on the 15-minute. So it makes sense for the market to continue going upwards to at least break structure again on the 4-hour, which was this area here. So I was happy to take a trade looking to break structure again on the 4-hour if the opportunity presented itself. So watching price on the 7th of October, I came in just before 12 o'clock, and then I watched price and I saw it when it was here. So it was at a point where we'd had these two breaks of structure, we'd have this and then this break of structure. So for me, we did have here this break of structure to the low, but what made more sense to me is that this whole move here was just a liquidity grab and a mitigation by the institutions, because here what we've got is the first break of structure is actually caused by this order block down here, and that left behind clear imbalance. We then have the second break of structure, but that is a very small break of structure. It's really subtle and there's no real imbalance left behind by the order block which caused that. So for me, I wouldn't really be interested in taking a trade out of here when you've still got this clear order block down here with imbalance. So what I also considered is that there's going to be liquidity down here where traders have put their stop losses. So it really makes sense that there's an unmitigated order block down here, and there's an area of consolidation here which will have built up liquidity below it, no doubt. So when I saw this move here to the low, after seeing it reject, I was convinced that this was a mitigation and not really a break of structure. It was just a liquidity grab and a mitigation move. But still at this point, I wouldn't have traded until I saw another break of structure to the high to confirm to me that this was actually mitigation and a liquidity grab, and it wasn't a new break of structure to continue lower. So following this liquidity grab and mitigation play, what I saw was another break of structure to the high here. So after this break of structure to the high, I was pretty interested in getting involved in the order block, getting involved trading away from the order block, which caused this break of structure. So what I was looking at is essentially an area within this candle here, this overall sell candle on the 15-minute. But I wasn't happy to take I wasn't happy to take a trade with my stop loss below the full candle at the open because I felt like I could get a more accurate entry than that. So I went down to the lower time frames to try and identify a more accurate entry. And on the 5-minute, we can see this clear low here created before a high is created. So this area really started to interest me. And then looking on the 4-minute, this area here, it's even clearer. So that's clearly the last sell before this buy which breaks structure, and we also have a small imbalance there. So at that point, seeing this, so based on the 15-minute break of structure, and then based on the 4-minute refinement of the order block which caused the 15-minute break of structure, that's what I set my order based off. So for me, I did want the stop loss to be at least a pip below the actual edge of the box because sometimes price can just tap just below it, and in the end I opted to have a 4.5 pip stop loss. So I set my order when price was in this position here based off that 4-minute refinement of the 15-minute order block which caused this break of structure. And this is all because I'm still anticipating this move upwards to break the structure up here. So the price then triggered me in, and in fairness I did get pretty lucky to still be in the trade. I probably could have got a slightly better entry on this really, but I stayed in the trade after getting triggered in based on taking it from that logic, and it did get within less than a pip of my stop loss to be fair, but it's only a small stop loss, and yeah, it is pretty lucky that I managed to stay in the trade here, but the trade was taken based on logic, so I'm still happy with the trade overall. So I'd already considered before I was in the trade where I was looking to target, and what I really saw is that on the 3-hour we've got the break of structure here and the break of structure here, and in terms of what caused this initial break of structure, there's a clear order block up here. So for me, I wouldn't have been too surprised to see price react from this order block. So I really just wanted to target just below the start of that order block so that I could get out before price hit an area where it had a clear reason to start selling off from. So in the end, I just set my TP at 152.30, and then I just left it to play out. Now at this point here, I saw this imbalance here, and then that was essentially caused by this candle. So I did move my stop loss below that candle just to secure a 3-to-1 in case price did reverse prematurely, and then I still had my TP set in the market. So following that, I didn't really see the chart again on the 7th, and then when I woke up this morning, price had actually hit my TP while I was asleep, and that was it. So that's how I managed to get 19-to-1 out of the Forex market yesterday, and I'm pretty happy with the trade. Like I say, the entry could have been better, and I am lucky that I was still in it. But the overall trade was based off this move that I predicted on the 4-hour, and then based off the order flow on the 15-minute, which can be seen from this mitigation here, and then the break of structure that followed it, which generated a new point of interest for us to buy from following the order flow and following the 4-hour buy move, which was coming from this point of interest down here. So currently the price is actually running quite a bit higher, and obviously if I would have left the trade on, it would have made potentially quite a bit more. Could have gone, nearly 30 to 1 so far. But I'm really happy with the end result of the trade just being 19 to 1, because you don't really need to be getting every last bit out of a trade. I'd much rather get paid than just try and squeeze every drop out of a trade. But yeah, I'll definitely see how this trade plays out and consider how my management style could potentially be changed in future to maximize the profit even more. But I'm really happy with the end result of this trade. So I hope you guys have enjoyed this trade breakdown, and please subscribe to my channel if you want to see more trade breakdowns, more Forex trading forecasts, and if you're interested in my Forex journey in general or any Forex content from me. So I hope you guys have had a good trading week, and I'll have my forecast ready for you guys this weekend. So have a good day, guys.